Hello, everybody. I just saw that the on forexsignals.com, Jason and Andrew just finished their stream, so I decided to start mine right after. Um, Now, as you guys know, I'm gonna actually before I get into anything, I'm gonna make sure that my stream is working. You can hear me. Start mine right after. Um, Now, sounds like there might be a little bit of feedback. Let me see where that's coming from. Hmm. Now, sounds like there might be a little bit of feedback. Let me see. Yeah, I'll try to work on that a little bit later. At least you can hear me. I don't see that there is any sound coming from any direction, but from another place, but it does sound a bit strange. Anyways, excuse me. So, uh, yeah, I didn't want to interfere with what was going on at that forex signals. That's why I'm chiming in at about 10 a.m. Eastern Standard Time on Friday. Um, and following their stream. As you guys know, I can't advertise my stream on the website or pretty much anywhere on the website in general. I can't post a link, so I just have to do this stream on my own on YouTube. Uh, Now, a lot of you won't be watching me live, but some of you will be, most of you will be watching later on once the stream is done. Uh, Michael Oates, I was considering doing that. It's been about 6 weeks, maybe longer than that, since I actually had that big crash of my account. And I was considering taking a break, and I never stopped looking at the charts. I did take a break from trading my account though. I traded it once back on the first Friday of this month when I saw a really good opportunity, and that was during the NFP. And I came out with just about $20. Uh, I was looking for more. I was looking to ride the trade out a little bit longer, and it didn't happen. It reversed on me, and I was stopped out at just a small amount of profit. Um, so that one didn't work out too well, but didn't come out with a loss. It was a decent trade idea. It just didn't continue in the direction that I wanted it to. Now, uh, the next, I waited for another 2 weeks to before putting in another trade, and that was during right before the FOMC. Uh, Now, for those of you that are just tuning to my trade and missed my stream yesterday, uh, this is what you're looking at now is the trade. Um, so if I zoom in a little bit, let me get my marker out so I can mark my charts. Okay, so what we have is the first position up at the top. Now this was, yeah, 5 minutes before FOMC. Now, some of you may think that's crazy. Yes, it was a risky trade. I don't recommend it, especially a one lot trade on a $2,400 account. It's not recommended to use that kind of risk, especially on a 50 to 1 leverage account. My margin level was at just above 100. It was like 104%, which means I have almost no flexibility on the trade if it went against me. The strategy behind it was um, I had a loss 2 months ago. I lost 65% of my account, or maybe even 70%. It was tough, but I'm not trading that much, looking for opportunities to make some of those losses back. Um, and that's why I shot for NFP, didn't work out, and then I shot again to FOMC. NFP, I did not use the one lot risk. I used smaller than that. I think my max risk was a half a lot, so it was still more than typical. But I was looking for a lot of pips and a big push. I finally got that. Why did I pick this trade? Because a couple of reasons. One, um, I had a good feeling that the Feds were going to raise the rates. I didn't know for sure. It was still a risk. It was a gamble, especially putting a trade in before the news. Um, I did it anyway. Now, my thinking, this is my thought process when taking the trade, that, okay, well, I'll enter 5 minutes before, and if it's negative, if they don't raise the rates, it will likely shoot up, right? If they stayed the same. If they do raise it, and what everybody predicted, it would likely push down. And so that was the idea behind it. So right at the time that the news was coming out, I had my finger on the trigger, right on the X close out the trade button, just in case the rate stayed the same. And there would be a spike. There would be a pretty big spike at that point, and it would be happen pretty quickly. I might closing out the trade, I could have some slippage, but I was expecting to lose anywhere from 200 to 400 uh, dollars on that trade. It didn't happen. The most drawdown I hit was about 6 pips on the trade before it moved down. Okay, so it moved down after the announcement, about 60 or 65 pips. Then I saw the wordage with the FOMC statement, and I decided to hold longer. So initially, I was looking to take only about 60 pips or so, depending on what the outlook looked like for because of the statement. And I was ready to close out my trade here, depending on what that would look like. And I decided to hold on to it, and then it continued to push down. Okay, so what's happening now? I have moved my stop to break even, but recently, in the last couple hours, I actually just put in added to my original position. Now this is a much less risk trade at zero point 0.2 lots. It's a lot more fitting for the account size that I have, and this is just to help out the position a bit and to maybe gain a few more pips on the continued move back down. Um, Now, let me just check with chat to see if there's anything else happening. I have a thought. What do you think about having your rules down out line by line on your stream so follows can hold you accountable in real time? Uh, sure, if you'd like. Okay. Um, Michael, there is my rules are usually pretty standard. Uh, for an account size of 2,000, say $2,000. Usually I won't trade more than 2.2 lots. Uh, because of the news event and the idea behind the trade, the risk involved where I was risking anywhere from 10 to 20% on that trade. So losing upwards of $400. That was a risk I was willing to take on this account. But this kind of risk, this high lot risk on this account, is something that I almost never do. Um, and I saw the opportunity to cash in on something like this, or at least the potential for it, and I played it out. It's not something that I will likely do again, at least on this account and in the near future. This is an anomaly type of an event for me, and I don't see myself doing it again for at least the next 6 months. Uh, and the money that you see here, let's say that this continues to go down to my profit target of 300 pips from the original order to the take profit. If it continues to move down, I will take the hard stop loss or the hard take profit, and I will be withdrawing $2,000 of the profit. I will be taking my wife to Iceland. So this is um, so I'm actually going to be seeing something from this trade, and it will bring my wife and I on a trip. And I think that because the forex, me trading forex has been uh, an up and down thing for her and for me, I decided to kind of uh, at least take something away from this anomaly type of trade. But typically, yeah, I will be trading uh, zero point 0.2 lots on my standard trades or less. Um, and so my entry. So let's talk about where my entry was on the second re on the continuation here. So I was watching this. I knew that there was potential for a bounce. So the big push here, and the push actually stopped out here, or stopped, and we had the bounce. Now I saw this candle. This was a bullish inside candle, and there was the potential for this to bounce from there. Now there was a couple of those that happened. There's one here. There was one here. Uh, and this was also considered as a bullish engulfing type of candle, and then the inside. So there have been multiple hints, one, two, three, four, of a potential bounce from those points. And the one that actually stuck was this bottom one here, right at the in near the 1.04 level. Now we moved, excuse me, 100 pips from the bottom to the top. I believe we're just over 100 pips, and that's a pretty good retracement or pullback. And I knew that it could happen at any point, like I said, with all the hints. Um, and I was looking for that retracement to happen. Let's mark all these. Oh, that's not the one. Here, 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 and here. I was looking for those to happen and for a point in the price action for a continuation of the move back down. Now, that did happen here. The um, I wanted quite a decent pullback, and we did have it. Like I said, 100 pips. Then I was looking for a candle, a hint, or a candlestick, or some kind of uh, the technical side of things that would show me a hint that this would start moving back down. And the first hint that I did receive was this candle here. This is a rejection candle with the flag here closing below the open of the previous candle, um, and then the potential for it to move back down from there. Now it has moved down. The trade's right up out about break even at the moment. It has moved down. We did get a wick candle here, uh, so there is some indecision here. Overall, I still find that the bears are still holding on to their positions. They need more of a reason to exit or pull out their positions. Right now, that's not the case, and I feel like this will trail over into next week. All right, I'll come back to that in a second. I'm checking the chat. Michael Oates. Okay, I see what you're getting at. Yes, I broke my rules. I broke my rules this time, and sometimes rules uh, sometimes rules need to be broken. Um, and why do sometimes rules need to be broken? Because the markets are always changing. They're always giving us new things, new price action, movements, and things that are changing on the fundamental analysis. And we need to adapt to that kind of market behavior to stay ahead of the game. Now, I adapted to my conditions. What were my conditions? Down 65% on the account. I lost a large portion of my account and was looking for an opportunity that didn't take a lot of risk to make a good portion of my account back. And that's why I only traded my account 2 times in the last 2 months. I was looking for an opportunity that could give me a bit of an edge with a changing market. And to me, that was NFP. And back on the third, I think, or the second, It was the 2nd of December. Now in NFP, there was a push up. As you guys know, a large portion of the time, or more than half of the time, NFP, there'll be initial push up or down, and then there'll be a whipsaw action. So you'll have something like this, where the push up is covered, and in most cases, the candlestick it's overwhelmed. It's basically like a whipsaw or engulfing type of candle on the next hour. Um, that happens. So initially we'll have a fake out and then a trend push in the opposite direction, or vice versa, down and then a big trend in the opposite direction. Um, and knowing that there was a high probability of that happening, initially on NFP, the push was, I think it was down. Uh, yeah, initial push was up, I mean. Then I knew that that was going to happen, that there was potential for this to shoot down and the trend to continue in the downward direction. So I entered a trade, and it did push down, but we had some whipsaw. We had some unsure in the market. It was with the time that the actual initial news push from NFP was not engulfed in that situation. It was one of the few times that it didn't happen. I was still protected. I played the trade, so I was protected, and I wasn't going to get stopped out in a huge loss, even though my risk was a bit higher. Now here, similar situation. I saw an opportunity uh, that I could make some losses back. Now the thing is a lot of people can refer that as revenge trading. It's he's emotionally compromised um, and trying to make losses back. But honestly, guys, it's been 2 months since I've had that loss. And I don't consider it revenge trading at this point. Now, if it was a day later or the same day, that's more of a revenge type of trading idea that would follow a big loss event. I held off on trading my account to clear my mind and look for some good opportunities to to make some of those losses back. Okay, um, so we're gonna continue to write this down a bit into next week. I'll probably possibly up until Christmas, but it will be likely a hard stop loss, a hard take profit, and a hard stop loss. Now, I'm going to move my stop loss for the top order to break even. That means I'm moving it down a bit because of the re-entry here. It means that if this does bounce up, I will need to likely cut for my losses or break even or small profit somewhere in this area, I would guess. I'd have to do the math just to make sure. All right, so instead of talking about so much about what I'm doing and my risk level in this strange trade that I did, let's get into some of the market analysis to see what's happening here. Okay, so we talked about the euro US dollar. I do feel like it's going to fall, continue to fall down. Actually, 1 second. Michael Oates, yeah. So Michael Oates is saying, "I'm sorry, man, but you have to follow your own rules. Don't you think it's a bad sign if you have already started breaking your own rules? Otherwise, you can't. How can you identify problems in your strategy?" Uh, Michael, this is not part of my strategy. This trade that you see here. For those of you that know me, you know that I'm typically a counter trend trader. I look for small pip profits, and even when I'm trading with the trend, I still look for usually under 100 pips. Uh, this is a different event for me. This is a big event. This is one of the biggest events of the year, um, with the last FOMC statement to come out and them raising the rates. It was a big event, um, and it caused me to news trade. I basically based this trade off of the news, which I typically don't do. So this isn't part of my strategy. This is, like I said, an anomaly type of trade that I don't typically do, but I saw I understand how fundamental analysis works and technical, and decided to play this one. This is not something that I will do in the longer term. And you say breaking your rules. How is this breaking my rules when this isn't part of my rules to begin with? Uh, and I don't plan on trading like this. And if I do pick to trade the FOMC or NFP like I did this month, over the last couple of weeks, then I won't be trading with the one lot for a $2,000 account. My risk will be closer to a point 0.2 or even a point 0.1. That's closer to what my risk would be. So typically on an account of mine, I'd be sitting on a profit of maybe $200 or something like that. And I'm fine with that. It's a great trade. It's actually quite a big gain on account size of that of this size. That would be a 10% gain, which is substantial. I don't like showing this off very much. What I wish I could show is that I took a lower risk trade, something like 0.2 lots, and to show you that my entry, and instead of it being one lot, yeah, it's a little bit embarrassing, honestly. But it is helping out my account, and I plan to withdraw the majority of the profits that if the trade closes uh, in the positive. All right. So Euro USD, yeah, I do think it may be on its way down to 1.02. My profit is set on my two trades at 1.03228. And so I hold on to that for the next while until that hits profit or I get stopped out at break even. And 1.2 is one thing. It might even head down lower. Um, and like Jason was saying at forexsignals.com, yeah, I think it may be on its way to parity. All right, so the pound USD, the push down. Any trades right now would be looking to counter trend right here in this area for the push up and then the potential for the continuation. So this would be any trades in here would be counter trend. I don't see any opportunities in the price action at this point. Nothing indicating to me that we're going to have a bounce here yet. So if we zoom out on the picture, we look at the support resistance. We see that there is a support area in here on the previous. It was the support here, 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 and so on and so forth. And it also is acting as potentially one here. Although I'm not getting any price action hints that this is a bouncing level or that price action is showing me that it will jump from here and then have a pullback. Some may consider that this is already a pullback, and it is somewhat one, but compared to the big push down, it's very minimal at this point. Okay, so the UJ. This has been following the USD strength, and as some of you or many of you may know, there is a correlation a lot of the time when the Euro US dollar is moving down, the UJ is moving up. So it's a negative correlation. The UJ has been flat for the last while. We had a top out or reversal candles there, and that's about it. This was showing me that there could be a pullback in a retracement after that, but the pullback didn't happen. The fundamental side of trading was really pushing the price higher in this case, and so the technical indication of where price may go was being ignored. That's usually how price works. I mean, price will uh, is a good indication, or it helps us understand where price may or may not go. But still, the fundamental side is what's going to continue. Is what's going to push uh, the market in a given direction. So technical trading needs a fundamental background or a fundamental basis. Uh, I don't think you can trade successfully without both. Now, this trade was based solely on fundamental, on the initial entry, but I am now playing it with on the technical side and understanding that technical areas where there could be a bounce or a pullback likely could be ignored if the USD continues its strength and people are continue to hold their short positions, then price action will be ignored on the way down, depending on how much strength is going on that currency. Okay, so the UJ, I believe that it has topped out here, but I do think that it will continue. There hasn't been a lot of retracement yet, like we've seen on the Euro US dollar. This was a decent retracement for a push like this, and then a reversal, which we're getting right now, which is nice. Okay. I talked about this yesterday, the push up on the UJ, and then the nice reversal candle here. It's pretty big though. That's a large candle. It's 78 pips. Likely not a good place to enter on a position on the way back down, or a retracement on the counter trend side. If you're looking for pips, I would look for something pretty small, especially since this is countering the move up. No indication to me that there was a bounce here. I mean, obviously did. It was used as a support and it moved up from there. We did have slightly higher lows, but we also had lower highs as well. So it was going in this cone shape thing here, and then it broke out. But this would have been really difficult to peg for an entry on the continuation because the candles just didn't show me anything good there. The AUD USD, it's really struggling. It's just continuing to go down way more than the Euro USD right now. Um, and that's also causing the Euro Australian dollar to have its opposite correlation, and that's on the downside, on the upside. Now, typically, they both have been overall moving down because of how weak the euro is right now. Uh, and now the Australian dollar is just tanking in a big way. So if you see in the recent time, so this leg here is moving down. If you compare it to the Euro Australian dollar, this leg here moving up, so you know that at this point that the Australian dollar is driving the price currently on these two pairs. Okay, the downside is pretty obvious on the euro, the Aussie USD. There wasn't much pullbacks. The biggest areas were here. They were pretty limited. The This one might have been considered as a possible taker because of the bullish engulfing candle here. This one not good enough for me. I wouldn't have taken it. But what I'm really looking at is areas that show us potential for more on the downside. Now, I wouldn't take these positions because the retracements weren't enough. But these candles, this bearish engulfing or bearish inside, and this wick candle here showing us a potential reversal or continuation, uh, all happened, but the retracements of the pullbacks weren't enough. They weren't enough to take these entries. So I would have passed on it. Okay, I talked about this trade briefly yesterday. It was the odd Japanese yen, the inside candle, really good potential for a small pip amount. I wouldn't have taken a large pip here, probably 20, 30 pips. So I would have been out of this trade pretty quickly. So right now, since this is moving up, but same situation, the Australian dollar is pushing down, as I showed you on the odd USD and the Euro Australian dollar, that the odd Japanese yen is now suffering too. Okay, so a good thing to be doing right now is looking for a place that it might bottom out, or a support area. So let's look for that now, since this is looking like it could shape up to be something. All right, so we see a small area of support there. If we're just looking on the 1 hour, we see one here. So I'm marking the resistance and the support without indicators. I'm actually going to go to the 4-hour chart because there's too many of them, and we're going to peg this out a little bit easier. Okay. So that's what we're looking at those specific areas for price to maybe bounce off, or have a reaction to. Right now we're just about to hit this area. So how do we play this? We wait for the price, see how it behaves at this level. We want to see if the candlestick breaks through and closes, the body of the candle closes below that support line. And it just happens to be a whole number, 8600 or 86.000. That means that there is additional strength there, that people might, and I say might because I don't really know, might follow. But they potentially will be looking there for a bounce back up. But if they don't, if they think that the Australian dollar or whatever factors are having on the currency right now, if they think that this area is not strong enough, considering what's happening with the currency, then they will push it down, break it through, and it will continue down further. So what we look for is some kind of reversal candle at that point, like we had here. This is an inside bullish candle directly after a bearish. So bearish candle makes a new low, body of the candle, and then the next candle right after that. I'm going to zoom in on this particular. So for those of you that are new and don't know quite what I'm talking about, so we have the high, recent high, the push down, the bearish candle that made a new recent low in the last 10 candles or so. Then we have an inside bullish candle. And that, to me, shows that there could be a reversal point there, and it's also a whole number, like I pointed out here. And then the push back up. Now the push up happened to hit this resistance area again, and then went back down towards the whole number. It did eventually break. So price at the moment, on the current hour, this candle doesn't close for another 40 minutes. Price is reacting to that level right now, at least. We'll see how it is in the next 20 minutes. All right. But if we see a slowdown in the next few hours, so if price slows down near this area, and we see wicks closing, so body of the candle or the wicks above the line, the support line, then this could continue to act as a support level, and we could see a bounce back up to the resistance at 86,575. This could be a potential good trade to take, depending on how price continues to react to it, for a profit of about 50 pips. So we'll continue to look over that in the next 15 or 20 minutes while I'm streaming. And for those of you that are watch it through the course of the day, I get quite a few views during the course of the day. If this candle, look at this pair, look at the odd Japanese yen if you trade this pair, and see what's happened in the next few hours, the 2 to 5 hours. See how this is reacted over time, and to see if it is looking like it may be uh, obeying the previous support level. Okay, the CAD Japanese yen, not a pair that I trade very often. Um, it's definitely trending up. We're seeing lots of new higher highs, higher lows, and it's looking pretty good. So we want the pullback, and that's kind of happening right now. It's not huge. We did see a nice reversal candle here that went back down and made a new higher low from here. Right now, this area is trying to act as a support level, but you see what's happening here is that the pullbacks are getting smaller and smaller, which it's starting to do this. It starts to get a little tricky in this case where we're going to either have a breakout in one direction, and I do think that this level may not hold, and this one as well. So we're starting to get into a cone here where something may happen before too long. I don't know about today. There's not a lot of news, but next week I'll be watching this pair for some potential moves. I'll go to the Euro Australian dollar in a second. We're coming back to the Euro USD. Hey, Baja app. So our trade's looking pretty good. Our second re-entry. We're at 30 pips profit, just over 30 pips. It's continuing back down. Right now, at this point, I want to see a candle close, the body of the candle close in strength, in good strength, before I'm convinced that this was the actual reversal point for the continuation of the trend. And once I see that happening, if this current candle closes strong, then I'd be more convinced. But at that point, when I keep seeing this happen, where we have a decent body, but we have the flag of the candle, it shows there's still it's still an insecure market, and traders aren't really sure if they want to drive the price down yet. But if this closes where it is now, yeah, I would be more convinced that this is going to continue down and potentially break this level, or at least retest it by the end of the day. Okay. So back to the Euro Australian dollar. Okay, so as we know that this is taking a dive, and it will continue to take a dive, especially if the USD it continues to see strength right now. The USD is not seeing the huge strength right now, but the Australian dollar is just continuing to fall as we have as I do my stream here. It's already 40 pips in this one candle, and the Euro Australian dollar, vice versa, it's also seen about 55 pips. This has been moving down, but it's been more of a range because of the conditions of the Australian dollar and the euro have been all over the place. I marked this yesterday. There's support levels. It's in a bit of a range. I don't like what I see with the pair right now. I do feel like overall it's down, but it's not something that I would be looking to trade, at least on the upside. I'll be looking for areas of resistance that are hit for a continuation back down, considering that the euro weakness overall. There was a nice reversal candle here. There was one here, 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 here. There's a couple other ones, but the range was too tight in here to really take any of these smaller ones. This is the big one I'd be looking at. It's also the best looking. Why is it the best looking? Well, because it did break this small range. It made a new low, and it also made the candle itself made a new low, but it also broke the previous open, and it was bullish. It closed very strong, and that to me was the best place to enter against the trend, or on the pullback. The second best one was here. Actually, I would have this would have been just as accurate to me for taking on a pullback. But these other ones, not as good. Okay. Um, so the GJ, let's check on our Euro US dollar, and I'll close out this stream. Let's see how long we've been going for, about 40 minutes. I'll close out the stream in about 15 minutes, and just to see how this candle closes. Meanwhile, I'll talk about some of the other pairs, and we'll go from there. But yeah, you guys, you don't have to watch the full stream. This might be boring to you. I try to talk about the technical side of things, why I'm taking the trades I am, all that kind of stuff. Okay. Uh, the GJ, it's been moving up big way. If you scroll out, it's been moving up for a long time. So on this one, if we're taking trades with the trend, we want we're looking for pullbacks in that trend. The bigger the pullback, the better. But we don't want it to break too many levels. So let's use this as an example. We're looking at the swing levels here. Okay, so that's new higher highs. So it's showing that this is an uptrend. We have a new lower low from the last previous one, a higher low, but this one was actually broken. It's broken here, and it did find support eventually, and it bounced, and it broke the last swing high. All right, so there is, so we want the pullback, we want to enter on those pullbacks. And if it does break the level, it's not the end of the world. But if this level was broken down there, if this continued to fall down and break that level, then maybe the trend direction is completely changing overall, and we could see this the trend up stopping completely. And so it's important to watch for those. There is no reversal in here that I could see. There was the potential for one here. It was really weak, not worth taking. This in here, not worth taking. It wasn't, the candles didn't look the way I wanted them to for bounce, even though it did bounce from there. Now this one, that is a little different. This is a different picture. Yes, the pullback is not that much, but this is actually a pretty good setup for bounce. And my initial take profits would have been the resistance point, which would have been just about 50 pips. Now, okay, so if we're looking at counter trend, we're looking at this push up. We don't see any candles in here that showed this move down. At least that gave us good enough hints to take that. We do have one here though. It's a new high, inside candle, pretty good indication for a push down. And when counter trend trading, we look for smaller pip amounts, anywhere from 20 to 40 pips usually, or 45. We could do 45 too. But yeah, 20 to 40 is probably pretty solid. And so we look for the next opportunity. So we're looking at this swing high for potentially for price to obey that. Since it obeyed it in the past, is it strong enough to obey it again and move back down from that point? It did not. Not at least not at that point. A lot of this candle showed some indecision, but it wasn't strong enough and it pushed up from there. Now, the places that I'd be looking for a reversal or a full for pullback, the candle, inside candle, a bearish inside candle here. And this is close to a reversal candle up here, just not good enough. My entry would have been here. Although it was a bit early, uh, and it would have gone against me a bit, it would have eventually come back down. Now, for re-entries, it's in 100 pips in the drawdown before the reversal happened. So we're going to mark this area up here, and we're going to see if price showed us any support or resistance there. Okay, so we look back and we see that there was a little bit of support here. This was our original mark, and right then it doesn't really show much in recent history, all the way back to January. So that area, not huge. The biggest area of support I marked from previous history, and it's actually right here in this area. So taking this entry would have been fine, but re-entering, I might not have done it. I may have placed a pending order and a blind pending order based on distance. Say, for example, I think that if the market goes up against me 100 pips or so, I may enter another trade. If it's on the GJ, it's a pretty volatile pair. I might actually shoot for more than that, either 100 to 150 pips on a re-entry. If there is no price action that shows me an indication that this could continue in a retracement. I don't trade the GBP SEC, just not a pair for me. I usually will stick to the majors and some of the crosses. Okay. The UCAT. Now I know Andrew is trading this in the forex forexsignals.com. I think that he said that he was taking a long position. It would make more sense with the USD strength right now. And so we saw this huge thing, this huge move, looking for pullbacks. There wasn't much indication here. There wasn't anything here, even though these were minor pullbacks. There wasn't anything in price action that really showed me this candle is questionable, not good enough for me. This candle is closer. I was actually watching this the other day for potential entry. I saw this candle happening. This is inside. I saw that the retracement was okay. I saw this candle happen right after it again, and then this candle. I stayed out of this one because I'm in on the Euro USD right now. But when I saw these candles happening 3 times in a row, I was beginning to think that this was going to continue. Now, I knew that the USD strength was strong and it would continue to be at least against the USD, but it's also pretty much across the board as well. And so the trend continuation did happen at that point. It's good, but I'd look for if some of you happen to enter in this area on the trend continuation, I'd look to maybe take profit there. Now, if you're really looking to push this, you can hold it longer. I would maybe consider closing out a small portion of your trade if you're able to do that at that point, as that is a whole number up there and it could show some resistance, but it could break. Now, if you're holding on to a position, I do recommend looking at the power of the candlesticks, the body of the candlesticks, to see how they react to that level. If they close strong above it, at it, below it, and that could you could base off your take profit off of that, how price is behaving at that level, if there's insecurity and all that kind of stuff. Okay, the Australian dollar is just totally getting jacked. And it's really it's in some cases helping the euro US dollar as well. The pound is pretty much flat right now. Um, Pound USD. The UJ is starting to react a little bit to what's happening. Not much. I'm going to see what's happening with the AUD USD, as this seems like a pretty big push, to see if I can find any news in regards to it. Okay, so nothing I can find. It could just be an in-day push on the AUD USD. So we have 5 minutes left. This candle's looking pretty strong for me, which gives me a lot of hope that this will continue in its down direction. All right. So I'm gonna wait to see how it closes the next 4 minutes, and then I'm gonna sign off. All right. So we're looking at 50 pips on the odd CAD. Same story. And as the other Australian pairs, it's really just pushing down. Um, this pair has been in a downtrend for the last while, and so this is not really great for an entry. You don't want to enter down here. You don't want to enter where it's already moved a lot in the day, and it's completely ripe for a pullback sometime later today. It could easily continue, but it's just wise to wait for a pullback before entering, like I did here on the Euro US dollar. Wait for a pullback, re-enter on the way back down. Okay. And the pound Australian dollar. Pound is climbing again on this pair at least. Not really doing much on the pound USD, but yeah, it's in a big way. Look for the pound Australian dollar to possibly find support up at this level. It's already hit that level 3 times. So it could potentially find that as a good support or strong support as resistance level and move back down. Look at candle action to see how it behaves. All right, I think I'm going to end a little early because this candle is looking pretty good already. I think that it would have to pull up a lot in the last couple minutes. But you guys know my rules. I won't be pulling this out. I'll be looking at the candle strength to see how things uh, continue to behave, uh, just as I guess a comfort of thought, um, to see uh, how the outlook, at least on price action, is looking with the Euro US dollar. I will continue to hold unless I see something on the fundamental side of things saying that inflation is going to rise. Predictions for inflation are going to rise. More analysis has been done with that. Um, and something like that could cause the rally for the USD to stop. But it's not going to stop based on technical levels. It's going this one because of how much strength the USD and the talk, the language involved in the FOMC statement. It's going to take a pretty big thing to really push the USD back up or back down, at least in the in the recent future. All right, I think that's it for now, and I'll see you guys back maybe on Monday. Now, I won't be streaming every day. I'm going to see the reactions of people watching the stream, see if they like it, want me to continue, and I'll base how many streams I do off of that. Right now, I'm considering doing maybe one a day or one every other day. I'll be following in the 9 to 10 o'clock bracket, and that will be it. Sorry for the ringing in the back, guys, but I'll see you next time.